Hello and welcome back to the Geordie Pig Investor channel, where we delve into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, I will be reviewing a subscriber's portfolio, going through each and every stock and my thoughts on them. Once I've reviewed every stock, I'll give my overall thoughts on the portfolio and if I would change anything about it. Today's portfolio is from a long-term subscriber called Investing with Al. He has his own YouTube channel, so I've left the link to it in the description down below, so please go check him out. Today, I'll be going through his stocks and shares ISA, which is currently valued at over £100,000. A bit of background on Al. He is 42 years old and his main goal is to live off the dividends received from the portfolio by the age of 50. He contributes £1,666 per month into his stocks and shares ISA, which means he'll be maxing out the 20k limit every single year and hopes to do so over the next few years, and plans to switch to dividend focused stocks once the portfolio reaches around £400,000 to £500,000. He's been investing since April 2021, so has been investing for 4 years, and as you can see, his portfolio has a rate of return currently at 67.1%, with returns of over £25,000 in unrealised gains. So let's have a closer look at each holding within the portfolio. First up in Al's portfolio is Alphabet, stock ticker GOOGL. It is his biggest allocation at 12.3% and one that's performed pretty well, being up 15%. Alphabet is the parent company of Google and is a leading technology company known for its dominance in internet-related services and products. Analysts are very optimistic about Google with their next earnings call coming at the end of February. I will be monitoring Alphabet's upcoming earnings report and its performance in key growth areas such as cloud computing and digital advertising. Additionally, it's important to stay informed about any regulatory developments, including ongoing antitrust proceedings, which could impact the company's operations and stock performance. I really like this stock under $190, and I'm a big fan of this stock being a bigger allocation in his portfolio. Next up, we have Visa, stock ticker V, with over £9,000 in the stock, making it an 8.87% allocation of his portfolio. As you can see, another stock that he's had great gains in, being up over 22%. Recently, Visa's stock reached an all-time high of $356, reflecting strong investor confidence. Visa has reported a 10% increase in revenue to $9.5 billion, driven by robust holiday spending and a 9% rise in payment volumes. This stock is such a powerhouse, and from a dividend perspective has a phenomenal growth rate with an average of 15.41% over the last 5 years. With them also having such a low dividend payout ratio, currently at only 21%, I can only see them continuing this strong growth rate in the coming years. Additionally, Visa's investments in artificial intelligence are expected to enhance payment security and operational efficiency, positioning the company well in the evolving fintech landscape. Overall, Visa's strong financial performance, strategic investments, and positive analyst outlook suggest a promising trajectory for the company's stock and a position I really like in Al's portfolio, especially being a bigger holding. Next up, we have MicroStrategy being an 8.6% allocation in the portfolio, being his third biggest holding. MicroStrategy is a prominent enterprise analytics and mobility software provider that's gained significant attention due to its substantial investment in Bitcoin. The company currently holds approximately 479,000 Bitcoins, acquired at an average cost of $85,447 per Bitcoin, totaling around $22.1 billion. This means that the stock's performance is closely tied to Bitcoin's volatility, making it susceptible to fluctuations in the crypto market. Investors should consider the inherent risks associated with MicroStrategy's significant exposure to Bitcoin, as market volatility can impact the company's financial position and stock performance. With Al being only 42 and the potential upside with this stock, I don't mind it being a part of the portfolio, although I think the allocation is on the riskier side. Personally, I'd be more inclined to have this closer to a 5% allocation, so if Bitcoin or the crypto market does plummet, then it won't have a huge impact on its overall portfolio performance. We can already see the risks with it being the only stock in his top 5 that currently has a negative unrealised gain. The next stock in the portfolio is MasterCard, stock ticker MA, and is another stock with an over 8% allocation in the portfolio. It's also another strong performer, being up over 17% on the position, and one that's in the financial sector just like Visa. MasterCard has recently reported a 16% increase in net revenue, reaching $7.5 billion. This was driven, similar to Visa, by robust consumer spending during the holiday season. Their adjusted earnings per share stood at $3.82, surpassing analyst expectations of $3.69. And the company's gross dollar volume grew by 12%, with cross-border transactions up 20%, attributed to increased travel spending and cryptocurrency purchases. Additionally, value-added services, including fraud protection, saw a 17% revenue boost. During this period, MasterCard completed the $2.65 billion acquisition of threat intelligence firm Recorded Future, enhancing its cyber security capabilities. The company's recently introduced some digital and financial management tools targeting middle market businesses, reflecting its commitment to innovation and addressing diverse market needs. However, MasterCard faces challenges, including a potential $200 million settlement in the UK over alleged overcharging fees between 1992 and 2008. If approved, this settlement would impact millions of British consumers. Analysts have noted that while MasterCard has demonstrated strong performance, Visa's stock might present a more attractive investment opportunity in 2025 due to its strong US market presence and lower valuation. Overall, though, MasterCard continues to show resilience and growth, supported by strategic acquisitions and partnerships, despite facing legal and competitive challenges, and does have a phenomenal dividend growth rate at 13.7% over the last 5 years, with a very low payout ratio currently sitting at 19%. It's another position that I personally really like in Al's portfolio, and I'd be very comfortable having this at 8% allocation like he has. Next up is Imperial Brands, stock ticker IMB, being one of his best performers in the portfolio, up over 60%. This is just under an 8% allocation in the portfolio at 7.91% and is a massive dividend payer at having a dividend yield currently at 6.82%. Imperial Brands plc is a British multinational tobacco company. It has been shifting focus towards smoking alternatives such as vapes and nicotine pouches, which now account for over 8% of their revenue. Despite challenges from declining cigarette sales and increased regulation, the company has reported steady profit growth. In 2024, its operating profit rose 4.6%, driven by strong performance in its core markets and alternative products. Imperial Brands also continues to reward shareholders through dividends and share buybacks. The CEO, Stefan Bomhard, earned over $9.1 million in the past year, reflecting the company's strong financial performance. Under his leadership, Imperial Brands has focused on core tobacco markets and cautiously invested in new products, resulting in a 4.5% increase in operating profit to nearly $3.6 billion. The company's share price has risen 41% over the last 12 months. Looking ahead, Imperial Brands anticipates low single-digit net revenue growth and a mid-single-digit rise in operating profit for 2025. The company plans to enhance shareholder returns through a full year of dividends and continue those share buybacks. Despite challenges from declining smoking rates and increased regulations, Imperial Brands continues to adapt by expanding its portfolio of smoking alternatives and implementing strategic plans to sustain growth. Personally, I think for Al, the allocation is on the slightly higher side in his portfolio, but maybe that's due to the unexpected gains it's made over the last year. It is one that I do like in Al's portfolio though, especially with the strong dividend payment, but just one that he'll have to keep an eye on. Next up is Tesla, a stock that's performed extremely well for Al, being up close to 80%. This position is just under 7% of the portfolio, and Tesla is an American company that designs and manufactures electric vehicles, battery energy storage systems, solar panels, and related products. It was founded back in 2003 and is best known for its electric cars. Tesla stands out for its innovations in battery technologies, self-driving software, and ambitious plans for sustainable energy and artificial intelligence. Tesla is one of the most widely traded stocks in the world. It is a high-growth stock with significant volatility, attracting both long-term investors and short-term traders. Tesla has seen massive price swings over the last year, experiencing rapid gains as well as sharp declines. It was one of the best performing stocks in the 2010s, with a huge rally recently in 2020 to 2021. However, in 2022 and beyond, the stock has faced challenges from rising interest rates and increasing competition in the EV sector. As well as this, the CEO, Elon Musk, has huge influence on the stock price, and if people are upset with his public opinions or decisions, it can really affect the stock. Having said this, Tesla is expanding into AI, robotics, and energy storage, which could drive long-term value. With myself being a more dividend-focused investor, it's not one that I would personally look to own as it doesn't pay a dividend, but it is a stock that could be very rewarding, and at just under 7% of Al's portfolio, I'm not against it. I know if this stock was to surpass the 100% unrealized gains mark though, I'd look to trim it down just with the high volatility, and I'd be happy to take some profit off the table. Next up is one that I'm not very familiar with, and that is Carnival PLC, stock ticker CCL. This stock is actually the best performer in his entire portfolio, being up over 100%, and it sits at just over 5% of his overall allocation. After looking into it further, it is a British-American cruise line company and one of the largest cruise operators in the world. It operates alongside its US-listed counterpart, Carnival Corporation, under a dual-listed structure. The company owns several major cruise brands, including Carnival Cruise Line, Princess Cruises, Holland America Line, Costa Cruises, P&O Cruises, and many more. The cruise industry was severely impacted from the COVID-19 pandemic, and Carnival was no different as they had to take on significant debt during this period. Since then, it has been in recovery mode, and luckily, there has been increasing demand for travel and vacations. It has been able to reduce debt and increase profits over the last couple of years, putting the company in a very strong position. And Al has obviously been able to get in at a great price. The company did used to pay a dividend, but hasn't done since 2020. The next stock in the portfolio is Microsoft, also being at just above a 5% allocation. Microsoft, stock ticker MSFT, has seen some solid returns, over 15% in the portfolio, and it is one of the largest companies in the world with a market cap of over $2 trillion. It's known for its software, cloud computing, gaming, and artificial intelligence businesses. For me, this is one of the best blue chip stocks on the market and should be a core holding for long-term investors. They even pay a small dividend currently, and I can see them increasing that dividend growth quite significantly over the next few years. It's another stock I'm a huge fan of in this portfolio, and I do like the allocation at over 5%. Next up is another big winner in the portfolio, being up 34% on the position, and it's none other than AbbVie, stock ticker ABBV. This is a global biopharmaceutical company renowned for its extensive portfolio of immunology and oncology products. Its recent strong performance has been driven by the strong growth of its newer immunology drugs, which have generated over $5.5 billion between them. Having said this, the company's former top-selling drug, Humira, experienced a 49% decrease in sales to $1.68 billion due to increased competition from biosimilars. This is another stock with a solid dividend yield at over 3.5% and 11 years dividend growth rate with a 7.6% 5-year average dividend growth rate. You should monitor AbbVie's ability to sustain growth in its immunology segment and its strategies to mitigate the impact of declining Humira sales, but this is a brilliant choice for any portfolio. The 10th stock in Al's portfolio is ExxonMobil, stock ticker XOM. This one is currently around 4.4% of the portfolio, and he is up 27%. ExxonMobil is one of the world's largest publicly traded oil and gas companies. It is a major player in the energy sector, engaged in the exploration, production, refining, and sale of oil, natural gas, and petrochemicals. This stock has a long history of paying an increasing dividend, making it popular amongst dividend investors. They have actually increased their dividend payment for the last 24 years and have a very nice yield sitting at over 3.5%. The stock's performance is heavily tied to crude oil and natural gas prices. This means that the increasing government regulations and the shift towards renewable energy may impact long-term growth, so it's a stock that I think can continue to perform well over maybe the next 5, 10 or 15 years, but looking further beyond that, I could see it start to decline. Personally, I don't mind owning stocks like this as long as you continue to monitor them closely, and when you realize the decline, make sure you get out. Now let's have a look at the rest of Al's portfolio, as the remaining 12 stocks all have a sub 4% allocation. Some standouts from these stocks are Amazon, Nvidia, Apple, and Broadcom, all showing really good returns. Personally, I'm a fan of most of these stocks and think there's a good mix. I do think that the 3 stocks with a sub 2% allocation could be looked to either increase the position size or just sell out of them, as I don't see much point in having the sizings in your portfolio. I prefer to keep it trimmed and easier to manage. Having said that, overall, I love the size of the portfolio. For me, if it's under 25 holdings, then I think it's manageable, and Al's portfolio currently sits at 22 holdings. Not only that, but I feel most of the stocks are of high quality and ones I'd have no issue with owning myself. I feel Al does have a good mix of growth and dividend stocks in his portfolio, with it being more focused on the growth. This makes sense as he is fairly young, still being only 42, with plenty of time still in the market. One area I would love to see in this portfolio is having some form of ETF as a core position. I think in this portfolio he owns some great stocks, but for me, any investor should look to have either a global or US based ETF such as VWRL or VUSA as a main part of the portfolio. Even if he had one sitting at around 15 to 20% of the portfolio, that would really make a big difference for me in this portfolio. As well as this, I'd look to potentially slightly lower the allocation to Alphabet as it's over 10% of the portfolio. I know it's a really strong stock that seems to be trading at a great price currently, but I think any one stock should never be more than 10% of a portfolio, as you run the risk of not being diversified enough, especially with Al not owning any ETFs. Maybe Alphabet has only recently become a bigger position due to the price decline and opportunity that arose. If that is the case, then as long as over the next few months other positions are added to, which will eventually bring the allocation below 10%, then I wouldn't mind that approach. But something for him to consider is the fact his top 5 holdings make up over 45% of the entire portfolio, which I find is too concentrated regardless of the type of stocks they are. Finally, something for Al to consider over the longer term is that once the portfolio is getting closer to or at that end target of £400,000 to £500,000, he can look to sell out of some of the higher growth stocks and reallocate the capital into more reliable dividend paying stocks so that he can achieve his goal of living off the dividends. I'm sure he already has a rough plan in place for this, as he has just 8 years till this time will hopefully become a reality for him. Overall, this portfolio is extremely impressive for his current and future intentions, and with some minor tweaks, I see it having everything I'd be looking for. My main advice is to just keep doing what you're doing and just constantly assess your positions and keep reminding yourself about the end goal being around 8 years away from now. So ask yourself what you think is the best strategy to achieve your goals moving forward. The fact you're able to max out your ISA every year is already a really encouraging sign in itself, and I have no doubt you are well on your way to reaching your investing goals. I'm going to give this portfolio overall out of 10 a 7.5. I must add that if he had an ETF in the portfolio, it would gain 1 to 1.5 extra points, putting it around a 9 for me. I can't give portfolios without one above an 8, as I really do feel strongly about having it as a core holding. Obviously, if Al is comfortable with not having it in his portfolio, then that's great, and it is still a brilliant looking portfolio. Thanks for watching. If you're building a portfolio for passive income and financial freedom, then don't forget to like, subscribe, and hit that bell notification so you never miss an update. And if you want to be featured in the next video, then please leave a comment on this video and send me a message on X at @TheGeordiePig, answering all the relevant questions I have in the description. Until next time, keep compounding and stay patient in the market, because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.